Hold on, it's not. Oh, there we go.
Oh,
You are live. Hello, how you been, old friend?
It's been a while. I've been good. I'm doing great. How about you, champ?
Doing well, doing well. Welcome back, everyone. After a couple week hiatus, a little break. Kind of needed it a little bit mentally. You know, it was nice to throw a holiday in there on a Thursday, get a little extra time off. We are back. And this is the Orlando Real Estate Buzz. I'm Brendan Rendo of the Homes in Orlando team, and joined as always by Joseph Dion of Appley Home Loans. And I would expect a bigger smile on your face this morning. We had some freaking awesome news for you today.
Well, it's tough. We had CPI, right? Inflation readings come in, but it was kind of telegraphed. So Powell's been talking this week. We saw the markets moving. We kind of felt like all this information, we knew we were going to have a really good reading yesterday and the day before. If the news, I don't want to say it leaked because, I don't know where it was, but the way we were seeing markets move, somebody knew that this reading was going to be great. So we kind of got that feeling, and it did. It came out awesome. CPI, they were expecting an increase of 0.1. We actually got a decrease of 0.1, which is really, really good. And all the numbers across all the core, the different all the different readings, all were really in our favor, which basically meant 10-year T dropped big time. So we saw about 10 bip drop, which means MBS, mortgage-backed securities, are up.
Yeah,
we're up, 30 basis points today.
Yeah.
So that could be like an eighth on interest rate.
Yeah. Well, let's take a look at this nice little graph to start with then. Here is our 10-year rates. We haven't seen it below 4.2 in quite a while, have we?
No, it's been a little bit.
And so we kind of went from what was that, about 4 point, was it 4.2?
We were touching 4.3, we were right there.
Yeah. And we are down to 4.17 this morning.
Yeah.
And it's holding so far.
That's the big key. I wasn't sure if it would hold, but we've made a little bit of time since, because the CPI, if you look, that big drop right there, that's 8:30. That's when CPI comes out. So the fact that we're still holding an hour and a half later means that maybe there's a good shot that this holds throughout the day.
Yep. Which is good news, because really over the past couple of weeks, we've seen rates kind of creep up a little bit.
Yeah, they haven't been our friend too. They haven't gone buck wild like we've done in the past, but they haven't been sitting, they've kind of slowly kind of meandered up, then little jot down, but then right back to where they were. So this is really refreshing. And I hope that with when you're looking at that chart there, that it's stable, that stability of hey, it's not super volatile going up and down and everything, that maybe we'll see a lot of investors reprice really strong today. Knowing that, hey, it looks like all the data is pointing to this is going to be a firm
Yes. Yeah. I mean, when we get into it, here it is. All index items increased 3%. It's still not the target that they're looking for. Of the two. But they were saying they were expecting about 3.3. So that's a pretty good number that they improved it by.
Yeah.
And the big thing was energy, believe it or not. Is for a couple months in a row now, we've actually seen a decrease in gas prices.
Yeah.
So, you look at it here, there's your big one, 1%, because that's one of the main calculations in there. Our food's still, sitting there at 3. But you can afford to get to the store now.
You can, there we go. You're not crying about the drive to the store. Gotcha. It still hurts when you're at the store.
It still hurts when you're at the store.
Am I reading, food away from home, that's restaurants, right?
Yes, that's
4.1. My gosh. Do you think that's because of, minimum wage laws changes and increases are playing a big part of that?
I think it could be. I really do think it could be. Because it hurts to go out to a restaurant these days. It really does. Pepsi released some numbers today, and in their guidance, they had mentioned that people are buying less sodas, people are buying less snacks, and they're diverting to a lot more off brands than the on brands to save a few dollars. That kind of goes back to the food as well.
Yeah.
But there's another item in here that I thought was really important, and that was our shelter. Because what has really, really hurt us over the past couple of years is our shelter number.
Yep.
That's been sitting at that 9%, 10% range with the shelter. And we've actually seen, it's still 5.2, which isn't great.
But it's pulling back a little bit.
But it's pulling back a little bit. And that number has to continue to come down. And the other one that's hurting everybody is this one I'm kind of confused about, because transportation costs 9.4. If fuel costs are coming down, I'm wondering why this isn't pulling back a little bit. The only thing I could think of is they still have problems in the Middle East. They're still having, a lot of the ships are going around, increasing the container costs for shipping overall. So I'm wondering if that's what's causing the transportation services to still stay high right now. So, but here's a nice thing. If you're looking for a used car, look at this.
That's down 10%. Woo!
Down 10%.
Yeah.
There is a glut on used cars right now.
Yeah. Well, I even see with like new vehicles, there's that it's it's
look at the new vehicles. New vehicles are down.
Yeah.
And consistently down. Look at this. Since the past 1, 2, 3, 4, 5 months, the prices of new vehicles continue to decrease.
Yep.
Still overpriced, but they're coming down. So,
slowly. We'll get there.
Slowly but surely. But when you look at that was a good overall reading. The market was very happy to see it. The Dow surprised me because it's only gone up about $1 or $2. And it's
that's where I think when I said like somebody leaked something, the Dow was really like we saw some favorable movement in a lot of stock yesterday that was on no news. So it's kind of like, okay, well, they saw a lot of this, I think, and they adjusted based off of that. And now the movement, it's like, now that the news is here, it's like, okay.
Yep.
Like we already knew that.
Yeah. And then when we got into the jobless today, I think this is going to become more important as we head further into the year. Powell's come out and said a couple things that he hasn't really said all year long.
Yeah.
And that's that he's kind of start putting more emphasis on the jobs numbers.
Yep.
Than he has in the past.
Which we all know, like and we've talked about this previously on previous episodes, that things that are going to move, like we have inflation, but we also know unemployment is going to be a big thing that's going to be looked upon and seen. But it's not something that the Feds have really talked openly about as being a reason why they would trigger a change in the federal fund rate. But all of a sudden, Powell takes this big stance. So, and I kind of joke, like, right, they want to see inflation go down. They want to see it get down. They want to see it get lower. We've had CPI. We've had inflation numbers come in really nice the last couple of readings. Another really great reading. But all of a sudden, Powell's like, whoa, like unemployment, like we got to pay attention, unemployment, this and that. And then I kind of laughed because I was like, Powell's talking about how he's going to really be looking at these numbers, right? And then what happens? Unemployment number decreases. So it's well, it's almost like they're shifting the narrative a little bit to kind of make sure that they're controlling that higher longer, right?
Yes.
Because the inflation's doing what it wants, what we needed to go lower sooner. But now they're saying, well, let's also look at this.
Let's also look at the jobs.
Unemployment's been an issue. Oh, wait a minute, it decreased. It went down. Like maybe we can hold. And this is playing really into the narrative that I think you and I have said, like we've been saying this since last year. Last year there was there was going to be 6, 7 Fed rate cuts, and we were like, no, there is not. There's going to be one or two, and then we kind of like leaned into one, and we've been saying kind of on this, like we've been talking about before election. And when's the Fed meeting before election? You got elections in November. Are they going to wait till November? No. There's no meeting in October, right? I don't think so. Nobody in October, which means the only one that they can do it in is when?
September.
That's
it. Yep. And when we go to the watch, here's July, end of the month. They've got their meeting.
Yep.
Right. So 91% say they're going to hold right now.
There it is.
And I truly believe it. They're going to hold.
Yep. I think if unemployment would have ticked up higher,
yes,
right? If we would have had inflation down and unemployment continues to climb, like if unemployment, because we're at what, 4.1 right now for unemployment. Yeah. If we would have hit 4.2 on the last week on non-farm payroll and so forth, like if that would have been 4.2 last Friday, or if we got 4.3, definitely would have seen a cut.
Oh yeah.
But without it, we're not going to see a July cut. We're just not.
No. Because here we go. September. What do we got? 81% quarter point, our first quarter point cut.
Bam.
There it is.
It's almost playing in.
It's like, God, who predicted that?
It was probably it was somebody. I can't put. Well, you know what? Like, I'm so glad that all these experts are now predicting September because they've been way off before.
Yeah,
a couple of times. So maybe they're wrong again, and maybe we're wrong. But I really don't think so. I think September we're going to see that first cut. I think I've said it was somewhat politically motivated, but not politically motivated. Like right,
yep.
But how else would you sit there and justify that the Fed's structure, everything lines up perfectly that the last Fed meeting that they can cut rates before the election has the highest likelihood of rates being cut.
Yep. So I was kind of holding off thinking maybe December, January, but I think you're right now. I think September pretty much dialed in.
I know that one hurt you to say, Bridget.
Yeah, I know. Yeah. And I think one of the reasons why we may see the 10-year level off at the levels that we're seeing today is I think with the numbers today, I think it's going to be priced in. It'll be priced in from now moving forward.
Oh, you're exactly like I was talking to some originators about this, and then I do another podcast that's strategically for originators, weekly report that I do with a really brilliant guy that's much smarter than me, Jim King. You know him, right?
Yeah.
And we were talking about that we're going to get this Fed cut, like this rate cut. And we always say like a Fed rate cut doesn't necessarily mean mortgage interest rates drop. And I said, because it kind of gets baked in. We know they're gonna drop it beforehand. And I said, because we have such a long runway right now, I see rates improving through like maybe end of July and then holding steady through August. Yep. And then I can almost see, because we've been in this like fantasy land for markets, that if we don't get a 0.5% cut, rates get way worse. Because what I feel like is going to happen,
you've seen that in the past,
is I feel like even though everybody on this is saying, hey, we're going to get a quarter, the markets are going to respond and go, I hope we get a half.
I hope we get a half. Yep.
And then when we don't get a half, it's going to be like, shit. We didn't get a half.
And we're going to get the bounce back.
Mm-hmm. That's what I feel like is going to happen. That's my off the wall prediction for September's Fed rate cut. I could see that rates get slightly worse for mortgages after this Fed fund cut, because I think there's going to be a little bit of too much hopium going on beforehand.
Yeah. And what's interesting when you mention that 0.5 point is when you get out into November predictions, you got a lot of people, you got nearly half the market saying that they're going to do another 0.25 point in November.
Mm-hmm.
I don't see it because their philosophy has been higher for longer.
Yeah.
And if we're still holding at that 3% inflation rate, it's better, but it's not their goal.
Yeah. I think we do the quarter in September, and then I think if there's a second one, it'll be December.
Yeah.
But I think it's going to take markets moving the wrong way. I think it would take unemployment going up, because I don't think we're going to see that much improvement in inflation, right? Like I think the Fed's are going to be like, whoa, we gotta see how this quarter plays out, right? Yeah. Like, but if we see unemployment tick up, and
I'm surprised the unemployment number hasn't ticked up more, simply because number of layoffs we're seeing, but
It's all about
also
people.
the number of job openings has dropped
Mm-hmm.
tremendously. So you've got two factors going against employment.
Yeah.
Right now.
Well, how do they measure unemployment, right? How do they find these numbers? It's based off of like jobless claims, like who's filing for unemployment benefits. And I think a lot less people are applying for unemployment benefits because they're going, I can Uber or DoorDash or Lyft or do, like there's all these drive, Instacart, like, and make more money than I can on unemployment.
Yep.
And I think that's what's happening is you're just getting less people because they're able to find a gig that'll pay them $500 a week or $400 a week versus the $250 or $300 that they
$250
get.
or $300 a week. Yeah, which we had looked up before, and it's just it's not there.
Yeah. And so, I could see unemployment tick up too because like in Florida, what is it, September? I think minimum wage goes up again.
Yes,
I think September, and I don't know if it's like if that's kind of like I'm curious all the different states. I'm gonna do a little bit of work to get that answer. Is what states have unemployment or minimum wage numbers are increasing? California just increased, right? And there's a lot of what it was a lot of fast food restaurants, a lot of like companies that employ minimum wage employees. They haven't laid off people, but what they've done is reduced hours. So people that might have been full-time before are now part-time, and or they've sat there and said, okay, well, we can go, we'll go down a person and only, schedule everybody instead of having two people on a shift. We'll have one person on a shift.
One person on a shift.
And, so I think we're going to see that happen here in Florida as well, even though it's only a small one. I think they're at 13 right now and it's going to 14. I know it's going to 14. I don't know if it's at 13. I could be making that up. But it's I think if there's a lot of states that minimum wage is increasing this second half of the year, we could see unemployment numbers tick up from that too.
Yeah. Yep. So it's interesting to watch because I think a lot of what we've been telling everybody all year long is coming to fruition in the timeline, in the format that we kind of saw it coming to us. Yeah. And the other interesting thing is what you see in the real estate market generally end of August, beginning of September, before an election year, things slow up quite a bit.
It does.
Because
there's uncertainty, right?
Because people are uncertain which way things are going to go, what policies are going to be put into place. I know you and I were talking yesterday about some of the changes. Our changes from the court case for the real estate agents actually starts in for us August 6th. August 6th, the commission field for the buyer's agent goes away in the MLS.
How are they going to let people know what buyer agents are going to make?
They made another field called.
Is it
concession.
The same box? Do they do it the same way that the other one did?
It's going to say now, concession, yes or no. And then if you want to, you don't have to put the amount of the concession, but you can put, if there'll be a second field that will say concession 2.5, concession 2, concession 3. Yep. So as when I'm in the position of a buyer's agent, I'll still have a very good idea of what that concession is going to be.
Yeah.
For the buyer. So
can I ask you a very general question? Because I know you guys have to sign these agreements, right?
Yes.
And you can defer away and you can be like, you can talk to an attorney. No. So one of the big things that they were talking about was, well, we want to make sure that the buyer understands and the buyer agrees. So they were like, okay, we're going to do buyer agency agreements, which is like some states have them already, right?
Yeah.
But what I feel like is going to happen is, because my understanding is that once you set your commission rate, you can't increase it if the seller is willing to pay more.
Correct.
Right. So, but you can decrease it.
Yes.
Right.
Yeah.
So what I feel like, and I could be wrong, is what I feel like is going to happen is how many buyer agency agreements is are these time specific or property specific, or can it be one or the both, like one or
Can
two?
be
Because I feel like
all the above.
so what
All
I
the
feel like
above.
is going to happen is like, hey, on these 3 properties, here's your agreement, and this one's this. Like, you're basically like, I feel like almost like it's creating just a shit ton of stupid paperwork. Sorry,
Thank you.
because as an agent, you're going to be like, okay, well, they're offering me 3% on this one, so for this property, I want, I'm willing to show it, represent you for 3%. But this next one that we're going to go see 10 minutes later, they're only offering 2%. You don't have an extra percent to pay me, so for this property, I'm going to agree to 2%. Right? Is that what we think? Like, do you feel like that's essentially what's going to happen?
Yeah, because say I'm showing 5 houses on a Saturday.
Yeah.
Now I've got to pull them all up, look at what the concession is, and figure out, okay, well, the highest one is 3%, but all these others are 2.5%, and there's one at 2.25%.
Mm-hmm.
Okay, well, this is the way we'll do it. Is I'll write it at 3 because that way, if that's the house you like, we're protected. Okay.
Yep.
But if you get one of the 2.5s, what I'll do is I'll just say I'm canceling 0.5%. Like you said, it's going to create a lot of stupid paperwork. You literally can do it house by house.
Yeah. Which
so
I don't feel like
imagine going to look at 10 houses on a weekend.
Yeah.
And you send your buyer 10 different agreements.
Yeah.
The other thing is, you think you could keep it simple. It's 4 pages long.
I haven't seen it, so
it's 4 pages long. And it's like it's all legalese, and it's all like, it's like, look, I'm gonna work with you, and it's I'll do 3% unless we negotiate something different. There you go. It's like, come on.
Yeah.
Yeah.
I don't know what this, like, I get that there's probably no good way to fix this, and they're probably the best of what they can do on such short notice with this ruling. Like, I don't know if it was ever a broken system, but
what gets me is did it change anything?
No.
The only thing that happened is there's some lawyers who are sitting back drinking pina coladas because they have made a shitload of money and can retire now. That's it. That's it. That's the only thing it did.
Yeah.
So it's going to cause of course it's going to cause some confusion at the beginning. But I think what will happen is people, just like most documents, they're just going to get used to them. You're going to send over a packet. Hey, I need you to sign this, blah, 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 blah.
Yeah. Well, what I feel like is going to happen is over time, people are going to get used to it, and then people are going to get taken advantage by it.
Yeah.
Meaning that, oh, well, you just have to sign it. This is a process. It's normal, blah, blah, blah. We'll reduce down. You agreed to this. And then they're like, oh, okay, like I agreed to 3%, but that's because, the agent explained it to me that they're willing to negotiate down if it's paying less. And then it's like, oh, but this house is only paying 1%. You owe me 2%. Yeah. But you said you were going to, well, I showed you 40 houses now. I'm sorry. I'm not willing to negotiate down.
Yep.
Like, that's what I feel like is going to happen, is now you're going to have buyers.
You always get those shady agents. I remember when my mom was looking at one in South Carolina, just thinking about moving to South Carolina. The guy sent her one, the house she was looking at was 2.5%. And he sent her one for 3%. And I'm like, Mom, don't sign that. She's like, well, why not? I go, because if you buy that house, you owe him 0.5%. It's right there. Do you have anything saying that he'll do it for what the seller's offering? No. Okay. Well, then you're not signing it.
Yeah.
You can tell him that. He either changes it to 2.5 or forget it. And there's gonna be brokerages that will be out there, and they're gonna say, no, it's 3% or forget it.
Yep.
Even though you're an independent contractor, they're gonna say 3% or forget it.
It'll be interesting. I'm really curious. I like you said, like, I think on an industry wide, it's not going to change the way the industry. I think most sellers are still going to offer commissions. It's been this way for years. Like, yes, they pay for it. They do this, like, so to speak. How it was sold is, they took a few bad apples or inexperienced agents that didn't understand. And, my question is like, they may have gotten all that testimony of how people sold it, but you know, the video evidence. But I was like, how many other videos was it explained the right way that they didn't share?
Yeah.
Like,
Well, what's funny is if you read some of the transcript from the case, they asked the people suing, were you happy with your realtor? Oh yeah. Then why are you suing?
they were. They were told by an attorney.
This is great. This is great. I meant to mention this. The sellers are now suing to stop the Keller Williams and the Remax settlements because they're not getting enough money. So it may delay the whole thing. They're suing because their checks, which everyone explained to them, are going to be about $20. Congratulations, guys. You sued, screwed up a whole industry, and you're getting $20.
But those attorneys.
Yeah. What is, I mean, you figure what they get 30%, 35%.
Plus all their billable hours and everything else. Like, I mean, those
all
guys
are making.
Yeah. How much was the settlement again? they're making out like bandits.
Yeah, they are. So that's just funny. Oh, well, let's hop into our numbers for the week. These numbers are kind of skewed for the week because of course we had the holiday.
The holiday.
You know, some people took Wednesday off.
Let's just close this up. We don't even need to look at them.
Yeah. The big thing to pull out of here is our inventory still staying high.
Okay.
Still staying high. We're almost up to 7,000 homes available.
Okay.
Right now, which is phenomenal. And then inventory on our condos still staying up there. You know, we got nearly 3,500 condos. Then month of inventory, this is shot up because we were sitting about 4.
Yep.
And we're now at 5 months of inventory. So we're continuing to move into a stronger and stronger buyer's market than we have in a long time. And you can see it here with the original list, the sales price, we dropped below the 95%. And graphically, because of the short week, we really dropped down overall, but no summer boom.
No.
This year. We're in the past, you'd usually hit, end of April, beginning of May, and this number would slowly drive up. And we are not seeing it this year. Hopefully, with the rates coming down a little bit, I think beginning of August, we got the Hometown Heroes program that's going on. It's people, they still have money. They still have a good amount of money. So if you're a first-time home buyer and don't feel you've got the down payment, give us a call because they have still got money and take advantage of it. It's an absolutely phenomenal program. Then you see our inventory, we kind of leveled off, which I can see that because I've been, I go on every day for certain clients who are looking right now, and you're seeing the same houses over and over and over again. There's only maybe 1 or 2 new ones come on the market, but that's about it.
Yeah.
Nothing real major. Then this is interesting, is we've been watching this withdrawn number, and we peaked again at the end of the month. We shot up 175. So you're seeing that's a big jump. That's about homes, 40 more homes than usual. So we've been pretty consistent in that 130 range per week. We took a jump up 40. So people are pulling, sellers are starting to pull some houses a little bit there. Then our condos, total buyer's market, month of inventory, we got over 7 months of inventory right now in the condo market. I know I got one under contract this past week, and it was one of those situations where we watched. They had started at 205, and we put it under contract for 175,000.
Cool.
My buyer's very happy.
I bet
on that one. So, but those are where those are really where the numbers are sitting this week. Kind of skewed a little bit because of the holiday. But it'll be interesting to see this week if we start coming back up. And the hometown heroes really won't take effect till the end of the month.
Yeah,
that's where I expect to see a little bit of a boom. So
yeah, I think end of the month we'll see into early August. I think we see the numbers trickle up for into August, but it'd be curious because we're getting right back into school season. Like for like into August, and it's like, okay, well, I say right when we start to see it pick back up, will we see it drop back down because people are going to hold off on moving? Because everybody, like, that's why you see the boom, right? Is everybody tries to move when their kids are out of school.
You get the families that are trying to move, get settled in before school. But will we get, if we see the 10 years stay where we are and we get that price improvement, hopefully that we'll see, over the next couple of days, 2 or 3 days in the rates, will that give us a little additional push as well? Hopefully it will. So that's our week. Take care, everyone. Please like, subscribe, join us every Thursday, and we will see you next Thursday. Take care.
Perfect. Have a good one, guys.